Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty declined for the 8th straight session, but the losses are marginal. Bank stocks buck the trend. The rupee hits a new low against the dollar before recovering some ground. Safe haven rush takes gold prices to another record high. The yellow metal has now rallied over 11% in the month of September, making it the best month in the last 14 years. Silver prices up 18% this month. The U.S. government is headed for a shutdown, says Vice President J.D. Vance. The White House seeks to pin the blame on Democrats who are seeking additional health care funding. Several parts of the federal government will close either partially or fully from the 1st of October, with funding set to lapse. The Monetary Policy Committee is set to hold rates and maintain its neutral stance. As per a majority of market participants polled by CNBC TV 18, 60% believe RBI is unlikely to cut rates further in this cycle. The 4-month monsoon period officially ends today, with India receiving above normal rains in all 4 months. For the first time in 18 years, all regions receive above average rainfall, barring the east and northeast, where the deficit stands at 20%. This is the best monsoon in the last 5 years. IPL champions Royal Challengers Bengaluru up for sale. Sources say Serum's Zadar Poonawalla emerges as a front-runner among others in the fray. RCB owners Diageo eye a valuation of nearly $2 billion. That's a CNBC TV 18 exclusive. India's largest conglomerate, the Tata Group, loses nearly 10 lakh crore rupees in market cap in the last 12 months. TCS accounts for nearly half of the losses following Tata Motors, but other companies like Tata Steel, Tata Consumer and Titan buck the trend to gain value. President Trump proposes a 20-point peace plan to end the war in Gaza and return hostages to Israel. Leaders in the Middle East and Europe welcome the proposal. Hamas is studying the plan, which is vague on statehood for Palestine. The government pulls up e-commerce companies for raising prices on select items despite GST cuts in the last 1 week. Sources say more than 3,500 complaints have been registered, with a majority from UP, Bihar and Delhi. Well, let's start with the day's market action. The market's closing largely in the red today, with the Nifty and the Sensex down. For the 8th straight session, the Sensex fell by about 97 points, the Nifty down 23, so absolutely flat close. The Nifty mid-cap, nothing at all there, 3 points lower. And the bank stocks, again, up in positive territory, 170 points higher today, so bucking the trend once again. In the money market, the rupee hitting a fresh record low against the dollar in intraday trade, but the currency did recover some losses in late trade. $1 US now costs nearly 89 rupees. 10-year bond prices and yields remain largely stable in trade today. Remember, we also have the MPC coming up tomorrow. In the commodities market, gold prices hitting another record high, crossing the $3,800 mark in the international markets. The yellow metal has now rallied over 11% in September, making it the best month in the last 14 years. In India, too, gold prices have hit 1.16 lakh rupees per 10 grams for the first time. Prices of silver have also touched a record mark of 1.5 lakh per kg. The rally in the precious metals comes on the back of safe haven buying on account of a U.S. rate cut expectation and a potential U.S. government shutdown.
So if you look at the dollar chart of gold, it has been more volatile than equities. Gold has been more volatile than the S&P 500. So it's no safe haven. So have some gold in your asset allocation, but it should not be 25-30%. And yes, we have added silver also, because silver is looking good compared to gold. And silver also has industrial usage, and with the renewables, that is one area where silver is used. So actually, in terms of industrial demand, also silver has been going up.
Well, that's the story there as far as global commodities are concerned. But the big global story, a U.S. government shutdown appears imminent. Vice President J.D. Vance has said the shutdown is on the cards and has sought to blame the Democrats who are seeking additional health care funding. A meeting with congressional leaders at the White House failed to break the deadlock. Several parts of the federal government will close either partially or fully from the 1st of October in the absence of a federal funding bill.
I think we're headed to a shutdown because the Democrats won't do the right thing. I hope they change their mind, but we're going to see. We just had a very frank conversation with the Senate and House Democratic leadership. Look, the principle at stake here is very simple. We have disagreements about tax policy, but you don't shut that government down. We have disagreements about health care policy, but you don't shut the government down. You don't use your policy disagreements as leverage to not pay our troops, to not have essential services of government actually function.
Well, the possibility of a US government shutdown looms large. Back home, the Reserve Bank of India's Monetary Policy Committee will announce its interest rate decision tomorrow. The committee is set to hold rates and maintain its neutral stance, as per majority of the market participants polled by CNBC TV 18. Ritu's here to take us through what the street expects ahead of the MPC's decision. Ritu.
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC TV 18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5% to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Ritu, many thanks. The Met Department has said that India's monsoon period officially ends today, with more than 70% of the rainfall being recorded between June to September. So far, 2025 has seen the maximum amount of rainfall, with Arunachal receiving the least, while Rajasthan has received the most. The Met Department has pointed out that all 4 months received above average rains for the first time in 18 years. This was also the best monsoon in the last 5 years. Well, on to a CNBC TV 18 exclusive. IPL champions Royal Challengers Bengaluru are up for sale. Sources tell CNBC TV 18 that Siramzada Poonawalla has emerged as a front-runner among others in the fray. Manglam is standing by now to take us through a deal in the making. It's long been anticipated, Manglam, but finally it looks like Diageo could put RCB on the block.
Well, that's right. You know, what we understand from sources is that Royal Challengers Bengaluru parent Diageo is looking to sell the asset. Now, this has been on the cards for a while right now. The company has refused to comment on speculation. But what we now understand is that we have a buyer in place as well. Among the others, we have Siram's Adar Poonawalla, who has emerged as the front runner for the same. Citi is obviously, carrying this deal out. And what we also understand is that, the sellers are seeking a valuation of $2 billion, or closer to $2 billion for this franchise. It'll be very interesting to see how this goes about because of a couple of reasons. The last deal that happened was Gujarat Titans. Two-thirds of that were bought by the Torrent Group and reportedly at a valuation of nearly 7,500 crore rupees, which is slightly under $1 billion. And even the last two teams that were auctioned by the BCCI, went a little over $1 billion itself. But the difference between those deals and now this one would be that, one, we understand that the buyer is seeking full stake sale and not just a part stake sale. And secondly, because it will be a secondary market transaction and not a sale from the BCCI or a new franchise being auctioned off from the BCCI, the payment would be entirely upfront as against a staggered, 10-year sort of payment that would come by for all the new franchises like Lucknow Super Giants or Gujarat Titans, which was in the auction bought by CBC Capital. And to that extent, how does the valuation scenario play out here would be something that we'll be tracking very, very closely. From a seller's standpoint, obviously, this will be the best time to cash in on the chips because they've won the cup or the championship after 18 long years of wait, and some of their star players are now towards the latter half of their career. But from a buyer's standpoint, it gives them a front foot access into India's biggest sporting action, which is cricket, and in that IPL, and also the long runway for growth that there is for a franchise like Royal Challengers Bengaluru, of which the fan base and fan engagement metrics are among the best in the world and not just the IPL. So all these factors make it a very, very interesting prospect. Let's see where the dust settles. We've actually, reached out to Adar Poonawalla, who refuses to comment on this, and Diageo also said that this is market speculation, so they do not want to put a word on that. But importantly, we had a word with United Spirits India MD CEO Praveen Someshwar earlier in this month, and he called it a very exciting business, but did qualify it as a non-core business for the company. So let's see where it goes. So after 18 long years of the fans saying "Ee saal cup namde" or "We'll win the cup this year," investors will now ask, "Ee saal deal namde" or "Will we get a deal this year?"
It's an exciting asset. It's clearly something which is absolutely exciting because cricket is the lifeline of the country, and within cricket, IPL has a play, and therefore it's an exciting asset. But that has nothing to do with our core Alcobev business. Well, I wouldn't get to saying unlocking or unlocking. It's certainly not core. There's no doubt about it. Alcobev is our core, and that's where we focus on our business, and that's exciting. This is an exciting extension.
Well, that could be a big deal in the making there. RCB up for sale, Diageo looking for a buyer, Adar Poonawalla expected to be the front runner. Tata Motors' own Jaguar Land Rover has secured a £2 billion emergency credit line. The Financial Times reports that Standard Chartered Bank, Citi and Mitsubishi Financial Group have agreed to offer the funding facility. Shares of Tata Motors surging in trade after that. The news comes just a day before the demerger of Tata Motors passenger and commercial vehicle business comes into effect. Now, it has been a rough year for the Tata Group, India's largest conglomerate. The group's valuation is down nearly 10 lakh crore rupees from its peak, with TCS accounting for a lion's share of the erosion. Yusuf is here with more on the Tata Group's valuation and the rocky ride so far in 2025. Yusuf.
Well, the Tata Group is bearing the brunt of US President Trump's tariff policies. India's largest conglomerate was valued at 35 lakh crore rupees at its peak. At the start of this year, the group was valued at over 31 lakh crore rupees. That valuation has now eroded by 5.4 lakh crore rupees to just under 26 lakh crore rupees. Trump's tariffs, the clampdown on H-1B visas, and a cyber attack on JLR has further dampened sentiment. The combined loss in market cap now accounts for about half of the group's annual revenue, which is also slowing. At 4.7%, the growth in revenue in FY25 was the slowest in 5 years. The group's revenue grew 17% in FY23 and over 12% in FY24. TCS accounts for 80% of the erosion in value, with nearly a third of the decline since the 19th of September after the crackdown on H-1B visas by the Trump administration. Trent has lost 85,000 crore rupees in value. Companies like Tata Motors, Indian Hotels and Voltas have also lost anywhere between 14,000 to 25,000 crore rupees in market cap. But some Tata Group companies have bucked this trend. Tata Steel has gained 39,000 crore rupees in market cap. Tata Consumer, Titan and Tata Investment have also added anywhere between 10,000 to 21,000 crore rupees to their market capitalization.
Yusuf, many thanks for joining us. Coming up next, US President Trump proposes a 20-point peace plan to end the war in Gaza and return hostages to Israel. That and more when we return. Well, a slew of listings on the Lal Street. Shares of Anand Rathi making their debut on the stock exchanges, up nearly 8% on the first day. No such luck, though, for the three other companies that listed today. Jaro Institute's shares listed flat, ended the day nearly 20% lower. Seshasai Tech shares listed at 2% premium but ended nearly 3% lower. And lastly, Solar World Energy's shares witnessed the highest jump, listing 11% above the issue price, but that stock also closed the day nearly 8% lower. So the new listings of the day. And speaking of IPOs, electronic major LG India is expected to hit Dalal Street soon. The company's subscription will open from the 7th of October. Rachna standing by to take us through the details. Rachna, another Korean company soon to hit Dalal Street after Hyundai India. Tell us more about the LG IPO.
That's right. LG India IPO is set to open between October 7 and October 9th with what could be one of the biggest IPOs of the year. The company plans to raise about 11,500 crore rupees or nearly $1.3 billion through the sale of a 15% stake. Now, the entire issue is an offer for sale where the South Korean parent will offload just over 10 crore shares. None of the proceeds will stay with the Indian subsidiary. Instead, they will flow back to the parent company all the way back to Korea. Now, this playbook may sound familiar because Hyundai followed a similar path just last year. Its IPO, the largest in India's history at nearly 28,000 crore rupees, also involved the parent selling a chunk of stake of about 17.5%. Again, the money went straight to Korea, not the Indian unit. In fact, both these IPOs share striking similarities. They're structured entirely as OFS issues. They represent Korean conglomerates unlocking value in their Indian arms, and both involve significant but minority stake dilutions to give public investors a slice of these consumer giants. Also, both Hyundai and LG manufacture the vast majority of their products here in India. Another striking similarity that I was just told about is they also share a brand ambassador, and that's Shah Rukh Khan. Now, Hyundai's IPO debut was muted as we know it. It was around this time last year. It opened slightly below its issue price in October 2024, despite heavy institutional demand. Now, whether LG faces a similar listing day performance or manages to outperform will be the key story to track when the IPO hits the street.
All right, Rachna, many thanks for joining us. That's LG India, all set for its Dalal Street debut. US President Donald Trump has proposed a 20-point proposal to bring an end to Israel-Gaza conflict. Israel's Prime Minister Benjamin Netanyahu has accepted the proposal. However, Hamas is studying the plan, which is vague on statehood for Palestine. Archana joins us now to explain to us what the Gaza peace proposal entails. This 20-point plan that was put together and presented by President Trump and Benjamin Netanyahu after their meeting last night. Archana, take us through what it means for all parties involved.
Right, Shireen, the most important part is if both sides agree to this. So let me give the main highlights of this 20-point plan. Point number one, if both sides agree to the plan, the war will end immediately. Within 72 hours of Israel publicly accepting the proposal, all hostages, alive and dead, will be returned. Once all hostages are released, Israel will free 250 Palestinian prisoners serving life sentences, plus 1,700 Gazans arrested after the start of conflict on October 7, 2023. Israel will not occupy or annex Gaza. The Israeli Defense Forces will hand over the Gaza territory it occupies to something called the International Stabilization Force. Now, what is the International Stabilization Force? Well, the United States will work with Arab and international partners to develop a temporary international stabilization force to immediately deploy in Gaza. Next point. Once all hostages are freed, members of Hamas who give up arms will be given amnesty. They'll be allowed to leave the country. Next point. Full aid will be immediately sent into Gaza Strip through the United Nations without interference from Israel or Hamas. Next, Gaza will be governed, and this is the most important point, Gaza will be governed under the temporary transitional governance of a committee made up of Palestinians and international experts to be overseen by something called the Board of Peace. Now, this Board of Peace will be headed and chaired by US President Donald Trump and will have members including former UK Prime Minister Tony Blair. Hamas would agree to have no role whatsoever in governing Gaza directly or indirectly. All military infrastructure, including tunnels and weapons production facilities, will be destroyed, and independent monitors will supervise the demilitarization of Gaza. Next, a Trump economic development plan to rebuild Gaza will be created by a panel of experts. A special economic zone will also be established. Under this plan, no one will be forced to leave Gaza, and those who want to leave will be free to do so and free to return. According to this plan, New Gaza will be fully committed to peaceful coexistence with the neighbors. Another important factor, a guarantee will be provided by regional partners to ensure that Hamas and other factions comply with their obligations and that New Gaza poses no threat to its neighbors or people. The United States will establish a dialogue between Israel and Palestinians to agree on a political horizon for peaceful and prosperous coexistence. And another important point of contention, which was the Palestinian statehood. Now, that is where there is some vagueness and ambiguity. Now, this plan says that while Gaza redevelopment advances and when the Palestinian Authority is reformed, the conditions may finally be in place for a credible pathway of self-determination and statehood, which we recognize as the aspiration of the Palestinian people. Now, what is the reaction so far? Hamas has yet to respond to Donald Trump's plan, while Prime Minister of Israel, Benjamin Netanyahu, has strongly opposed any Palestinian statehood. Trump has also said that Israel would have America's full backing to do so if Hamas did not accept the deal. Back to you.
Archana, many thanks for joining us. That 20-point plan, but as Archana was pointing out, yet to be agreed to by Hamas, though the Palestinian government has given its go-ahead. With that, it is time for us to wrap up this edition of Business 360. More news and updates will continue right here on CNBC TV 18. Stay tuned. We're back in a minute with more.